I'm a firm believer that in life, some of the most complicated problems don't always require a complicated solution. Oftentimes, it is quite the opposite. It requires a more simplified solution. And ladies and gentlemen, trading is no different. As a retail trader coming to the market, it is easy to feel overwhelmed or bombarded with a lot of information that you have to learn, from support and resistance to supply and demand, smart money concept, a wide variety of other concepts that you feel like you have to understand in order to gain a large understanding of price. As you start to walk towards the road of finding your edge and ultimately being profitable, what is going to happen is you're going to have to unlearn a lot of the concepts that you learn or simplify them. And that's what I had to do in my own personal trading. I had to go through a period where I had to unlearn a lot of the concepts and simplify them from an overall trading standpoint. And today I'm going to be diving into the main trading concepts, the two main trading concepts that I essentially, focus on when I come into the market. The very first concept is the concept of buyers and sellers. We're taking a look at pound yen 5-minute time frame. The concept on buyers is very simple. When liquidity flows into the market, right? When transactions are being made, orders are flowing into the market, money is coming into the market, right? Let's say from a buyer's standpoint, buyers are essentially moving higher, right? It is a clear thing in the market that you see prices taking out the highs, right? The highs are being targeted. This is essentially what happens as the market continues to move. Each highs will keep getting taken out, because that's what happens in a buyer's market. Buyers focus on taking out the highs, while sellers will focus on taking out the lows, essentially. So when I come into the market, I am paying attention to the highs and the lows. If price is taking out the highs, it means that buyers are in control, and the highest probability in terms of trade setup is probably to the buy side, right? I want to be a buyer. I don't want to be a seller, because right now this is not a seller's market. But when sellers come into the market, ladies and gentlemen, they start to take out the lows, right? The lows start getting taken out. And if we take a look at this example here on pound yen, we can see that buyers were dominant up until the price started to make lower lows, right, and lower highs. And sellers started coming to the market and making lower lows, lower highs, lower lows, and ultimately, getting to a point where this low was taken out. The next trading concept that's important now is momentum. And momentum is the speed of which price is moving in any particular direction. So when I come into the market and I've identified that, okay, we've switched from a buyer's market to a seller's market right now, potentially, as price has now taken out this low. If we go over to the 15-minute time frame, it means that we could likely see price target some further lows. So I mark out, what these lows are, and we can even map, we can say, we can map out this low as well. So ultimately, what I'm looking for now is an opportunity to get involved in a trade after the market has taken out this low. But I'm not just going to sell as price took out this low, because oftentimes what will happen is once you have strong bearish momentum, as a trader, you have to wait for an opportunity to get involved in the trade. Ideally, this would have been a great area to sell, but we didn't have the confirmation that sellers were going to be taking out the low. But now that sellers have taken out the lows and given us the play that, hey, price wants to continue its move to the downside, because that's the thing. You want to figure out where the direction is going. And once that move has been made, the next thing that you want to focus on is waiting for selling momentum to come back into the market. And right now, after sellers took out the low, we got some more buying momentum, and you can see the strength at which buyers are moving. A lot of traders would have sold right here only to get stopped out as price continues to move higher. Personally, what I like to do is I like to wait for the momentum to shift, because as traders, we never know if price is really going to be pushing up or pushing down. So right now, the highest probability based on what price has done is to the downside, because we have taken out this major low. But I don't want to just sell, because I need the market to give me further clues. And that's where momentum comes into play, because as the market is moving higher, right, we can see that we have strong bullish momentum, right? Price is not creating higher highs, higher lows, higher highs. So what I'm essentially looking for is an opportunity to get involved in a short trade. And I want to see if the bullish momentum is going to continue. We see price, okay. We see the market moving higher because we still are maintaining this overall bullish, momentum, and price is still essentially targeting the high. And ultimately, we don't know if price has any intentions on reaching this high. So what I like to focus on from a momentum standpoint is once I have identified that, hey, sellers moved with strong bearish momentum, rather than executing a short trade here, I like to wait for confirmation. Momentum is what allows me to gain that timing. So let's say we have our low right here and buyers are currently in the market. I essentially just wait. I want to be a seller, but I don't know if the market is going to be taking out this high. So what I do is I essentially wait and get confirmation. And I want to see the bullish momentum die down. So right here, I'm essentially watching, paying attention to that, and there you go. We see that right there. I also believe in coming into the market generally at the same time every day. I come in at about 7:30. So we're gonna see what price is like. So right there at about 7 o'clock, we're seeing, price essentially just continue a range bound movement. And this is about, let's see, this is 6:45. Okay, so 6:55, and we're seeing this momentum overall shift. So personally for me now, I can say that this bullish momentum that took place during the London session has now died down. So as a trader, I can say, you know what, if we get involved right here, 30 pips stop, we can say about 35, 36, right above this high right there, and essentially look to target this, like this low. So we have our first low right there that price can potentially target, especially on the 15-minute time frame. And what we see here is right there. So we have this low right there and we have this low right there. So let's see what happens, from a price action standpoint. And ultimately, price ends up essentially taking out this low. So this is my approach. This is how I do it. And a lot of the time, I'm not focusing on the support or resistance, the supply and demand. I am essentially just targeting the lows. And I am using momentum as a way for me to gauge when I should get involved in the trade. This is a strategy that you can also use as well. I have multiple strategies, but this is the baseline of essentially all my strategies. Identifying who is in control of the market. As buyers are moving higher, they're taking out the highs. When sellers are in the market, they're taking out the lows, right? So that gives me confirmation. If a low gets taken out and price is pulling back, I know it is essentially just, this momentum will eventually die down and more selling momentum is going to come in and price is going to go to its predetermined direction. That is essentially how I do it. And momentum, like I said, allows me to gauge where the market is going to go. So ladies and gentlemen, this is something that you can use for yourself. This is something that you can study. The very first thing I say is take it to the chart, right? Don't take my word for it. Go over to the market and just start plotting the highs and the lows and just start to see how price is moving, from a market structure standpoint, but, from a buyer and seller standpoint, right? When liquidity flows into the market, from a seller standpoint, it moves lower. The lows get targeted. This is where the liquidity is residing. This is where the stop loss is. This is where the take profit is. So a lot of the times when the lows get taken out, you're going to see a little bit of a pullback, whether it's just one candle, right? Or you get a whole pullback, right? You see here, price took out this low, boom, we had a candle right there that pulled back, and then the selling pressure continued. And the stronger the high or the low, the more significant the pullback. This was a major low, so when it was taken out, we saw a more significant pullback and then price continued. This is something I would highly recommend that you pay attention to, when you are trading. Maybe you use it for your trading approach. Maybe it's an additional tool that you have in your arsenal, combination with some of the other tools that you have. But I would definitely take it to the charts, back test it, but understand the concept of buyers and sellers, ladies and gentlemen, because from a market standpoint, it is one of the best ways to follow the institutions. And as a retail trader, put yourself in a position where you're trading with the big boys.